Hello, and thank you for joining us today. My name is Darlene Goins, and I'm the head of financial health philanthropy at Wells Fargo. It's a privilege to be here with you today and welcome you to the Road to Relief, Economic Recovery in Financially Vulnerable Communities. COVID-19 has heightened awareness of the financial hardships that so many people were already facing in this country. And the unrest that we've seen in cities across the nation once again remind us of the longstanding and deeply rooted racial and social inequities that we face at every turn in our society. COVID-19 and its economic impacts on millions of people in America are far from over. Today, I'm going to sit down one-on-one with 4 innovative nonprofit leaders who are taking different approaches to be able to provide support to the most vulnerable people in our community, those that may be disproportionately impacted or left out of systems or the social safety net. Communities of color who often lack liquid assets or easy access to affordable, responsible forms of credit. Immigrants who may not have the luxury of paid sick leave or unemployment benefits or other social safety net protections to help them weather the storm. Unbanked and underbanked individuals who may face barriers to gaining access to government benefits. People with disabilities who may have lost jobs and may be worried about how stimulus payments will impact their eligibility for benefits. And seniors who often develop disabilities with age and who were already aging into financial insecurity due to longer lifespans and the disappearance of defined benefit pensions and very little retirement savings. There are so many people that are struggling to navigate these challenging financial times, and Wells Fargo is honored to collaborate with these leaders and their organizations to help stabilize individuals, families, and communities, and really create a path to recovery for all. First, I'd like to welcome Jonathan Mintz, who is the founding president and CEO of the Cities for Financial Empowerment Fund. He brings together pioneering municipal governments from across the country to advance innovative financial empowerment initiatives at the municipal, state, and national level. Thank you, Jonathan, for joining us today.
Thanks, Darlene. It's great to see you.
Good to see you as well. So CFE Fund has done great work with financial empowerment centers, leading the Bank On movement, which seems a little bit serendipitous almost that you've been pushing around financial inclusion and getting people banked. And then we have this pandemic, which I think has probably further highlighted the importance of being banked. So can you talk to us a little bit about how that has really brought the importance of being banked into focus?
Yeah, it's a question we've thought a lot about. Obviously, in this crisis, I think for most of us, there was that moment in March where we all wondered which parts of our work could move forward and be helpful, and which parts of our work were going to end up getting pushed to the side. We have over 90 Bank On Coalition partners around the country, and they were wondering as well. I think that you're exactly right, which is banking, as important as it is, became significantly more important in the middle of this crisis. We always say that being unbanked isn't an adjective. It's a real impediment to people's ability to do the things that you and I do every day without giving it a second thought, to be able to receive your income, to be able to pay your bills. That's complicated if you don't have a bank or a credit union account. And that's really the point of Bank On. We've also learned through our work with some of our counselors that not being banked is also a significantly destabilizing influence on other things that you're trying to do in your life. So being unbanked has always really mattered. And it's why we've been doing this work and partnering with you all for so long. But when the COVID crisis hit, 2 major factors ramped up. One was that people needed to be able to transact from their bedrooms or their living rooms.
Right.
And without a bank account, that was nearly impossible. And so the things that were always hard about being unbanked suddenly became unbelievably harder. The second thing is it became dangerous because now when people were looking to transact and having to transact, they were having to go out and risk their health because of the social distancing aspect of this pandemic. They were having to literally risk their health to conduct their banking needs. That was a really big deal. Then came the stimulus payments, and the IRS and the Treasury Department is pushing out all this money that people desperately needed, particularly this population. Um, and if you didn't have a bank account and you couldn't get a bank account number to put into the IRS portal, you were going to have to wait not a couple of days or maybe a couple of weeks, but a couple of months to get emergency money. So banking became critical. Bank On was able to step up and try to connect these accounts, particularly accounts like those at Wells Fargo, that could be opened online by new customers. And so there was a real call to action for the Bang On community and for our banking partners that wanted to be able to provide those great accounts.
Well, thank you for your leadership position in this, because cash in hand was so important and so critical in those early months of COVID, and the time that it took for unemployment benefits to kick in for some people when they had lost their jobs or had been furloughed. So thank you for the efforts that you and your organization have taken to really drive more people to open safe, affordable banking accounts so that they could get access to the stimulus benefits sooner, and other government benefits.
Well, Iva, thank you right back, because Wells has been very supportive of these efforts. As you know, you guys stepped up and said, "How can we help, and how fast can we do it?" Which was a big deal. And you also doubled down on your Bank On account. You all took a terrific account that was already certified, your Easy Pay account, and ramped it way up to your new Clear Access account, which is just a fantastic and certified product right out of the gate. And so I'm just so glad that the things we do together in Bank On, which has always been, I think, part of the special sauce of this initiative, which is it's many sectors coming together for the same goal, that really has been able to play itself out so well. As you know, there were probably multiple emails a week coming from me to our banking partners saying, let's pull together, and I think we can do this, and I think we can partner with the IRS and the FDIC and do a national level push to connect people into these terrific accounts so that they can get their money and transact. So it was a powerful moment of partnership as well.
Absolutely. So talk to us a little bit about some of the other things that CFE Fund has done in response to some of the immediate needs coming out of the COVID pandemic.
Well, I'm so glad you asked. We learned a lesson back when I was in New York City government and Hurricane Sandy hit. And the lesson that we learned in New York was that municipal efforts at financial counseling were part of the frontline response. That there's a health component, or in the Hurricane Sandy experience, it was an environmental disaster. And dealing with that physically is, of course, job number one. But job number two in those frontline services was helping people deal with their finances and dealing with the new challenges. So one of the things that the CFE Fund did when this crisis hit was we knew that our existing partner cities and counties that had financial empowerment centers, which are public programs of one-on-one professional financial counseling, we knew that those cities were going to have to do two things fast. One, they were going to have to pivot to remote. And so we had to change the central infrastructure of this program to be able to allow for remote counseling. which is more than just can you figure out Zoom. It involves some of the technicalities of getting permission from clients to be able to pull credit scores, et cetera. So we had to pivot to remote. The second thing we had to do was we had to help them with demand. We knew that people, and in fact, we are seeing that people were going to be consuming financial counseling at a much higher rate. We have seen in a lot of our cities that that demand has gone up something like 40%. The other thing that's happened, and I know we all understand why, is the no-show rate plummeted to nearly zero. People are able to make their appointments, and so that also increased demand. And so thanks to partners like you and Bloomberg Philanthropies and several others, we were able to not only push out the remote functionality of financial empowerment centers, but be able to increase their resources so that they could meet that demand. That having been said, at the moment, we're only in 30 cities and counties on this program, and we knew that lots of our other partners cities wanted this service. Unfortunately, creating a financial empowerment center can't be done in a few weeks or a couple of months. It's a more complicated, intensive program. So what we did is we created a new program called the Financial Navigator Program. And the Financial Navigator Program, it's sort of a blend of financial empowerment center counseling and 311 and benefits counseling all together. And really what it is that we are equipping, again, with a central infrastructure of information. We have equipped another 30 plus cities and counties to have this navigation program so that people can call and have detailed personal conversations about what their financial needs are, and the navigator can make sure that they are connected to every local, state, and federal financial resource that might apply to their situation. And then at the end of that navigation session, push out a follow-up sheet that has all of that contact information. So that was whatever that metaphor is, building an airplane in the middle of the flight or something like that. It was a real scramble. But all told, we now have over 50 cities and counties that have either started anew or increased significantly their ability to meet people's frontline needs of addressing financial challenges and goals in the middle of this crisis.
That's just incredible. There's so many interconnected parts when you think about financial stability and moving through this crisis. There's housing insecurity that comes into play, food insecurity, and I think the importance of being able to connect people with those various resources that can help meet their unique needs is just phenomenal. So I'm glad that you all invented and built the plane while you were flying it and coming up with this new program, the Navigator program. So that's amazing.
I also have to say, and this goes a little bit to the DNA of my earlier work in consumer protection. We are also now helping 9 cities create local departments of consumer affairs. Unfortunately, one of the other lessons that we learned in the Hurricane Sandy situation is that disasters tend to bring out predators. So we wanted to make sure that as many cities as possible that were able to start building their muscle locally between messaging and collecting complaints and going after the folks that are claiming that, this miracle product cures you of the disease or sterilizes your home, and bakes bread at the same time, all the nonsense that you hear that takes advantage of people who are really desperate. So that's always, unfortunately, part of crisis response as well.
Absolutely. We've definitely seen that as more activity has shifted online, it's brought out a lot of fraudsters as well. So it's a good reminder to people to be extra vigilant during these times and be careful because there are a lot of predators out there.
Yeah, and to turn to trusted sources, which is where I think municipalities can play a nice role.
Absolutely.
Yeah.
Well, thank you so much, Jonathan, for joining us today. This has been a great discussion, and thank you for all of the work that you are leading. It really is incredible, and the need is so great that we need innovative leaders like you out there.
That's very nice. Well, thank you for your support and your help, and it's always fun to talk to you, Darlene.
Likewise. So I would like to welcome Jose Quinones, who is the founder and CEO of Mission Asset Fund based in San Francisco, California. MAF works with low-income and immigrant families to help them become visible, active, and successful in the financial marketplace. Since launching Lending Circles in 2008, MAF has built a national network of nonprofit providers to deliver credit building and savings programs to communities across the country. Jose, thank you so much for joining us today.
Well, thank you for having me. Really appreciate it.
So we know that people's financial lives are complex, particularly when there are uneven levels of income. I think about gig workers who may have a lot of fluctuations in their income, or hourly workers who may face lower wages if childcare falls through. I mean, there's just a lot of complexities in the financial lives, particularly for low-income people. And we know 45 million people are credit invisible. Tell us a little bit about the complexities, especially for immigrants. I would imagine that there would be additional layers to that complexity for immigrants, particularly now that we're in this pandemic.
Yeah, that is exactly correct. I mean, I think, we acknowledge that complexity in normal times. This is before the pandemic, sort of acknowledging the fact that just because people had low income didn't mean that they were all the same. We were sort of like trying to push against that notion that, that the idea that, that poverty was somehow the fault of the poor, or that they weren't working enough, or they weren't, they were making all the bad choices, or they were spending too much, or they weren't doing this or that, or they just weren't following, the guidebook, if you will. So we wanted to lift up to say, like, actually, it's a lot more complicated than that. People's lives are extremely complicated, and there's a lot of diversity and complexity even within particular segments of our clientele. And so we started to dig deeper to understand, the nature of the complexities. And for immigrants, again, this is even before the pandemic, one of the layers of complexity was really their immigration status. That depending on what immigration status they had, or depending on what visa they had, depending on what legal status that they had, it really kind of curtail their ability to develop their financial potential. And so we started to understand that even more. Again, this is before the pandemic. But then when the pandemic happened, I mean, things got even more complicated. Or we started to realize, the full complexity, of their lives, where we saw a lot of our clients that wanted to work. They wanted to be out and earning their their income, but they couldn't because they were asked to leave, they were furloughed, they were reduced pay, and then those that were lucky enough to kind of keep their jobs, or that were deemed essential, they were out there risking their health. They were out there risking, and getting the virus, and to the point where in California, I mean, the Latino community is disproportionately, impacted by the actual virus itself, much more than every other group. I mean, and so the idea that that people's financial lives are somewhat just, simple, or they weren't working enough, or they weren't making all the bad choices, or they weren't doing this, it's actually, it kind of knows the complexities of their lives and how they're trying to survive. So for us, we're trying to embrace that and trying to say, well, how can we, in this complexity, how can we embrace it and try to come up with ideas, solutions, or products that actually speak to their lives. And that's the nature of our work at MAP.
What you just shared is so true. I mean, there's so many false narratives about low-income people, people living in poverty, and policies and regulations are built based on those false narratives. So there's so much work for us to do to change those narratives and start to improve the policies and systems within which people are living their financial lives. So tell us a little bit more about the work of Mission Asset Fund.
Yeah, I think you hit on something really important about the false narratives, and I think that's something that as we work to develop products, services, ideas, insights, it's not enough to just expand on our program. It's not enough to just make sure that our program is like flawlessly executed. That we have to also take what we learn from that to really combat those false narratives, because that's the real impediment to really realizing
Mhm.
people's financial security. And so we take that work very seriously. So one of the things that we're doing is really expanding on this really age old tradition that people have of coming together and saving and lending money with one another. There's just through millennia all over the world, people have participated in groups that Mexico them call them tandas, cundinas, all throughout the Caribbean they call them susus, and really they have a thousand different names all over the world, but the activity itself is essentially the same, where you can imagine a group of 10 people coming together and agreeing to say each putting in $100, and then they collectively come up with $1,000, and then they agree, well, who's going to take that $1,000? So on month one somebody takes it, and then on second month the same group comes again together and they pull another $1,000, and then and a second person takes that pooled money, and they do that in rotation until everybody gets a chance of getting that $1,000. So this activity, is common, has been common, it predates even credit unions, if you will. So what we've done is we found a way to formalize that activity by getting people to sign promissory notes. And then through that promissory note, we're able to then service that social loan and report that activity to the credit bureaus. And by reporting it to the credit bureaus, we're helping people build or improve their credit score, or just add another positive trade line to their credit history. And so that's just one example of many other programs that we have where we basically took our principles and values of meeting people where they are and building on what is good in their lives, and then using that as a essentially like as a design mechanism to create a whole new program, a whole new product that is relevant to the lives of the people that we serve. And I think that that's something that is not just true, for math, but I think there's a lot of lessons for the industry as a whole about how can we create relevant, timely products that are really designed, with low income people in mind. And I say this because most of the products in the in the financial marketplace, frankly, they're not designed with our community in mind. Low income people are essentially secondary users the products and services that are out there, because those products are designed for other people and not for low income people. And so we're saying, like, here, if we follow this approach, we can actually come up with other services, other products that could be just as successful as lending circles.
Absolutely. Any thoughts on what some of those other products and services might look like, or maybe different policy or systems changes that need to be in place to really support the financial lives and stability of low-income people?
Yeah, I mean, yeah, there's a lot that's already been discussed, and I mean, I'll just like share one. I mean, about creating a checking account that is actually developed for success for poor people. A lot of checking account products, for example, they have this minimum uh, daily balance requirements that really is just too much. I mean, some of them require like $1,000 or maybe $5,000 in order for that checking account to be free for that individual. That if the balance kind of goes below that amount, that financial institution starts charging $5, $7 on a monthly basis just to have a checking account product. And so we're basically saying, like, we can actually reframe that product, maybe have a lower daily balance requirement, so that that product can actually become more of a utility for people. And so and because, but that's again looking at, well, what is the realities of low income individuals that need a checking account product that fits their realities. And I think we can reconceptualize that. I mean, there's definitely a lot of other ideas, from having prepaid cards that are more targeted, with less fees, so that people can navigate a digital space. But I think the fundamental point is this: is that when we understand and appreciate and really even embrace the complexity of people's financial lives, that we can actually come up with elegant solutions that fit their realities. And it is this idea of elegant solutions is really critical, because it's not about fearing that complexity, just because they have complex financial lives doesn't mean that they're incomprehensible financial lives. We can actually comprehend it so that we can come up with elegant solutions to actually fit their daily lives.
I love that phrase, elegant solutions. And I know we're short on time, but I'd love to hear just a little bit about what Mission Asset Fund has done specifically in response to the pandemic.
Yeah, no, thank you for asking that. This is another indication of how we have to be nimble and then really show up for the needs that people have at the time. When the pandemic happened, when people were asked to stay at home, when people were asked to leave their jobs, we knew that that people were going to need income, that we're going to need cash. And so we quickly lifted up a rapid response fund back in mid-March, and just to help our clients. Now, we didn't know what we were going to raise or how we were going to make it happen, but we knew that we needed to show up with something. And so since then, we actually raised close to $34 million from foundations, corporations, individuals all over the country. And then we took that money and we said, well, to give out as grants, $500 grants to individuals, low-income individuals, immigrants that were left out of the CARES Act, because there was a federal, project to help people with cash, but they explicitly excluded, big segments of our society, people with ITIN numbers, people that lived in mixed status households. So we wanted to focus on those individuals that were left out with our help of $500. And so after raising $34 million, now we're helping tens of thousands. I mean, I think we just went over 36,000 grants across the country. And so we're stepping up, understanding this is the need right now, but we also understand that in a post-pandemic, once we get out of this mess, we need to also show up and try to help rebuild their financial lives. And so we're going to come up with other products, other services to actually, be there for people. And so we're looking forward to that day. But right now, providing cash is really important.
It's just incredible, the elegant financial solutions that Mission Asset Fund has created and the impact that you're having on so many lives. So thank you so much, Jose, for joining us today. And thank you for the work that you and Mission Asset Fund are doing. It's just incredible, and we're happy to be able to support that work.
Great. Thank you. And I really appreciate your support. Thank you.
I'd like to welcome Dara Duguay, who is the CEO of Credit Builders Alliance and has been an advocate for financial capability and empowerment for over 25 years. An expert in personal finance, Dara has published 4 books, including the critically acclaimed Please Send Money, a Financial Survival Guide for Young Adults, and her latest release, From Wall Street with Love. Thank you, Dara, for joining us today.
Oh, thank you so much for having me, Darlene. It's a pleasure.
So Dara, tell us about Credit Builders Alliance and your work to help those with no or little credit really be included in the financial system.
Sure. Credit Builders Alliance is an alliance of nonprofits. We have a little under 600 located all across the country. And these nonprofits are really involved in helping people build a credit history. That's what they have in common, and that's why they're a member of our alliance. And we really help to connect the nonprofits to the credit bureaus. We have many nonprofit lenders. Many of them are community development financial institutions, or CDFIs, as we like to call them, and other nonprofit lenders. And we help them, we teach them how to do credit reporting. We facilitate credit reporting. And that's really, really important, because the borrowers that they serve tend to be low income. They tend to be people that don't have a credit history. So developing a credit history is super important. And then we help a lot of nonprofits that are engaged in financial coaching and counseling, and they need to have access to credit reports. And we have relationships with many of the credit bureaus so that the nonprofits can pull someone's credit report when they are giving them a financial coaching session and really go through it with them to show them what's on it, help them correct any errors, and also help them by giving them tips and advice of how to strengthen their credit history. Unfortunately, the credit report and a corresponding credit score is so important in today's society. And it really determines whether you get credit or whether you don't. Also, if you do get credit, what is your interest rate? And so that's really what we're all about, is helping people build credit.
That's fantastic. And I'm assuming that the types of credit building solutions you provide and your organizations provide are really providing access to affordable credit. That's what seems to be a barrier for so many low-income people.
Absolutely. And we find that many people that are not able to yet enter the mainstream financial services marketplace because many of them don't have a credit history and they're disenfranchised. Many of them, their options are very, very high cost predatory lenders. And our membership is not that. Our membership are nonprofit lenders. These CDFIs are certified by the US Treasury Department, and it's their mission to lend in distressed neighborhoods. They lend to people and small business owners that don't have a business yet. They might just have a plan for a food truck, and they help them to get access to credit, many of them for the first time. Many of the borrowers of our lender members are new immigrants, for instance, that are just starting to develop a credit history in this country. Yes, the access to credit is affordable, it's responsible. We find that some of our lender members, have extremely low interest rates, and some of them don't even charge any interest at all, which is the case for a recent grant that CBA received from Wells Fargo, that are grantees that are members of CBA that were recipients of subgrants from the Wells Fargo grant. The interest rate is 0 for emergency loans. And so you can't get lower than that.
That is just incredible. And I'm sure it's such a big need, especially during this time of COVID, where so many families and individuals have been severely impacted by the economic fallout from COVID. So how did your credit building initiatives shift from pre-pandemic to now?
We've just gotten really busy. We've gotten busy. The wonderful thing is that we really didn't have to shift doing what we're doing and what our members are doing because they are serving low-income individuals. They are serving individuals that don't usually have easy access to credit. They are serving people that don't tend to have a lot of savings because they spend every single dime that they make. Many of them, are low income, and so they don't have a lot of money to set aside for emergencies. And so when there is a pandemic or when there is another kind of emergency, it is so incredibly important for them to be able to access credit. In many cases, it's the choice between, being able to pay rent that month or not, being able to buy food that month or not. And so if you're living on the margins, this access to credit really, really is life-saving. And I'm not being, an exaggerated, it's not exaggerated in any sense when I say that.
Yes, I recall a story about a woman in Florida who had been furloughed from her job. Her son had worked at the same restaurant. He had been furloughed. And she was able to get one of these low cost or zero cost loans I think it was in the amount of $1,500 that was just enough to help her bridge the gap between when her unemployment benefits kicked in. And I seem to recall she said she was, going to sleep at night crying. She didn't want her kids to worry about her situation. So it's just a testimony to the great work that you and your member organizations are doing.
Thank you. Yeah, I mean, you have that story exactly correct. And I think that, if you talk about households, many households have, dual income earners. But in this woman's household, they were both in an industry that was impacted. And we're finding that all over. We're finding that many low-income people work in the hospitality industry, which has really been devastated by the pandemic. So if you work in restaurants, if you work in hotels, if you worked in, transportation, I mean, many of these industries are devastated, right? And then if you have numerous members of your family that all work in the same industry and then there's no income coming in, what do you do? And so really having access to credit is so critical.
Absolutely. And I think we're starting to see maybe some of the systemic barriers to financial stability come to light as a result of COVID. A lot of people have found that it's harder than one would think to get access to unemployment benefits. And so the work that you do is so instrumental in helping to stabilize families. But I'm wondering, from your perspective, what other types of policies or systemic barriers are you seeing highlighted as a result of COVID, where maybe we need to do some improvement as a society?
Yeah, that's a great question, Darlene. And if you look at the traditional way that many lenders underwrite individuals who are trying to access credit, it's usually through looking at the credit report. So what do you do if there's no information there? If someone just arrived here from another country, for instance, they may be an excellent credit risk, but they don't have a file yet. And so we're finding that more and more lenders are looking toward alternative data as a way to be able to underwrite more people. And we're looking at innovations like Experian has created, it's called Experian Boost. And it's a way for the consumer to give their own permission to link their bank account, or if they have a credit card and they pay, for instance, their utility bills, or if they pay their cell phone bills, either through their bank or through their credit card, they can give their permission and then this information will show up on their credit report. Normally, your bills don't show up on your credit report. So your utility bills don't show up, your telecom bills don't show up. But this is a way that the consumers can be in charge, and it will show up. TransUnion just their data is being used in a similar way from a new service called eCredible. So that's just a good example of ways that you can use alternative data. We're also finding a lot of lenders are looking at bank account information. So even if someone doesn't have a credit bureau file, if they have a bank account, there's a lot that you can tell from looking at their bank account. You can see if there's consistent deposits, for instance, that will show that someone has a consistent source of income. And so there's a lot of ways that you can use alternative data to really be able to underwrite a lot more people than just using traditional credit bureau information.
That's fantastic. I know that alternative data and Boost and eCredible can really make a difference in getting people access to affordable and responsible credit. So thank you. Is there anything else that you'd like to share before we leave?
I'd like to share that credit is not something to be scared of, and it's also not something that you should connote with negative thoughts, like evil and bad and dangerous. You might have had bad experiences with credit in the past, and so it's certainly understandable why you may, equate it with something negative. But if you can, sort of flip the scenario and look at credit as being something that can help you, it can be your friend. And even if you've had bad experiences in the past, is not going to write your future. You can recreate your future. You can always build a better and more positive credit history. And so just start doing it. Start small. Start by getting a small loan from a nonprofit lender, like one of the members of Credit Builders Alliance, that will say yes and not say no. And you'll be amazed at how you can start to really build a credit history, and before you know it, you can be in the prime category and be in the super prime category. And all of a sudden, ironically, be paying a lot less for credit than you have been. The better your credit history is, the less you'll have to pay in interest, and the more you'll be able to actually have to save and put away that you weren't able to do in the past. So, you know, have hope. I think that's my final parting, you know, thought. You can have hope and you can build a better credit future.
So thank you again, Dara. I think that's a great way to close things up. It's about creating hope for people. And so thank you so much for joining us today and for the work that you and your member organizations do. It really does make a difference.
And thank you so much, Darlene, for all of your support and the support of Wells Fargo. That really makes all the work that we do possible. So thank you so, so much.
I'd like to welcome Michael Morris, who is the founder of National Disability Institute and a senior strategic advisor. He has more than 30 years of experience in and outside of government, pioneering new strategies to improve the lives of people with disabilities. In addition, he serves as an advisor and technical expert to multiple federal agencies on policy and systems relationships at federal, state, and local levels to advance economic stability, mobility, and asset development for persons with disabilities. Thank you, Michael, for joining us today.
Thank you, Darlene. It's a pleasure to be with you, albeit long distance. Look forward to our conversation.
So you and I have talked quite a bit about people with disabilities and those with chronic health conditions and seniors. And I've been surprised at the vast number of people who fall into that category. And all of those people are facing immediate and longer term health risks as a result of the COVID-19 pandemic, as well as economic risks. So can you talk to us a little bit about what you're hearing from people with disabilities and chronic health conditions as they are trying to navigate these challenging times?
Yeah, great question. This truly has been an unprecedented set of challenges. As we know, millions of people, over 50 million people have lost their jobs. About 20% of people with disabilities who are working have lost their jobs due to COVID. And to share another statistic with you, approximately double that, 40% of people who are people of color and also challenged by disability lost their jobs as of about the month of May. We've seen some change in the positive, but those financial challenges, of course, are accompanied by health challenges. People with disabilities were among the most vulnerable population. That's also including people with chronic health conditions. And unfortunately, they have been a part of the death toll, which is now numbered over 200,000 people in this country. And we have tried to do everything we can to help our population of people with disabilities navigate this, this storm, this set of challenges.
And aren't the numbers staggering? I think it's something like 100 million people either have a disability or a chronic health condition. I mean, it's really staggering to me that nearly 1 in 3 people in our country, it falls into this situation.
Absolutely. Really, when you think about disability, it's such a diverse group of people, diverse by type of disability, by race, by ethnicity, by age. Some people are born into the disability community. Some people have accidents or changing health conditions, but it's an enormous group of people that have really faced this unprecedented set of challenges. And I've been so thankful that working with Wells Fargo, we've been able to pose some solutions.
So talk to us a little bit about how NDI is working to address the unique needs of this segment of our community.
Well, we were very fortunate to have early conversations right back in late February and March, when we all became accustomed to, as much as we could, COVID-19. We were able to create together something called the Resilience Center. It can be reached through the National Disability Institute's website. Financial resilience is not something easy for anyone, let alone people with disabilities. But what we created was a website which has had over 200,000 people visit it since we started. It offers information about government benefits, which continue to evolve, whether it relates to financial assistance or extended unemployment coverage. The website also helps people with basic questions about strategies to budget during this financial crisis and other resources that they can reach. We were very fortunate with your help and help of Wells Fargo to partner with two other organizations that not only are we a website, but we offer one-on-one support in terms of financial counselors through the organization AFCPE. And we also offer a partnership with LifeSense, which is an online set of courses, an online set of supports, so that we know it's not just information that's going to make the difference. People need to talk to others with more skills, with more experience. And so we've been very gratified to see in the emails we get and the thousands of people who have visited the site and also joined our support system with our two collaborators, to see people saying, we're going to get through this. We have support. We really appreciate the information and the opportunity for some one-on-one counseling.
That's fantastic. And I love the idea of having different solutions for different people depending on what their specific needs are. So for some, they may just need information that they can access on the website, and others, they may need a deeper one-on-one conversation with a certified financial professional from AFCPE, the Association for Financial Counseling and Planning Education, who can look at their specific financial situation and help them come up with strategies and tap into various benefits and resources. So I always love situations where we can bring different providers together, where 1 + 1 is greater than 2, or 1 + 1 + 1 is greater than 3 in this case, with NDI, AFCPE, and LifeSense. So that's wonderful. So you and I have also talked in the past about the intersectionality of race and gender and disability, particularly in the low and moderate income population, and how when a person may have more than one of these diversity dimensions, there is often a more substantial impact from things like the pandemic or other economic crises. So can you talk a little bit about what you're seeing there and how NDI is helping to address some of those challenges?
Yeah, great question again. At National Disability Institute, we have spent a considerable amount of time over the past 5 years really examining and understanding more about the intersectionality of race, ethnicity, and disability. It's difficult enough to be challenged economically, but often people with these multiple challenges face discrimination, face greater challenges in terms of getting a job. So we continue to compile statistics about the fact that people with disabilities are 2 to 3 times more likely to be living in poverty. This is pre-COVID, but post-COVID, the challenges are even more enormous. And we really think that, and we've worked together on this, is that This isn't a disability problem as a separate identity problem, and then separately looking at people defined by, it could be by gender, by race, by ethnicity. We all have multiple identities. And I think that we all can get better at making a commitment to understand how to be supportive and inclusive in the workplace, in our communities as a whole. We really are striving to try to find the kinds of supports that help people where they are and provide the support for them to really be motivated to thinking about work, thinking about different ways of income production, thinking about savings, and even thinking about investment, as we now have ABLE accounts with thousands of people being able to save without loss of or jeopardy of any public benefits.
So you raised very good points, Michael, around the intersectionality of race, ethnicity, disability. What are some other things that you would want our audience to consider when they're thinking about people with disabilities and the multiple identities that people may have?
You know, in this period we're in of such great challenges, health challenges and financial challenges, so many people just sort of throw up their hands and say, there's nothing I can do. But I want to say the exact opposite. Whether you're a senior leader in a corporation, whether it's your local church or place you worship, whether it's your local neighborhood, think about ways that you can include people with disabilities. Think about the assets, the value, the talent when you're thinking about hiring. Think about opportunities to draw people in. Even in this time of social inclusion, there are so many groups online that draw people with disabilities in. Be sensitive to individual differences. Be tolerant of, some people may have to hear a little bit differently. Some people may not be able to see. Some people are challenged by mobility issues. Others it may be cognitive or emotional issues, but everyone has something to contribute. And I think what's so wonderful about our work together is recognizing that everyone has a pathway to greater financial stability and greater financial health. And our work together really has, in so many ways, brought new opportunities for people to learn, to become more informed in making financial decisions, and really build an overall attitude that we all can contribute to of greater financial health for communities that are inclusive of people with disabilities.
I think that's a great note to end on, Michael. So thank you once again for all of the work that you and the National Disability Institute are doing to help provide more financial stability and resilience for people with disabilities. Thank you.
Well, it's a mutual admiration. We love our partnership with Wells Fargo and your sense of really being sensitive to diversity and inclusion. It shows in your work, it's demonstrated in how you provide services, and people with disabilities have benefited.
Thank you. Once again, I'd like to thank all of my guests for joining us today, and thank you all for joining us for this discussion. This is a time of great urgency in our country's history, yet hearing from these leaders today and the calls for change from so many people across our nation gives me immense hope that we are at an inflection point to finally address some of the deep-rooted systemic and structural barriers to economic mobility and wealth in this country. But it's going to take a collective effort. It's going to take collaboration from all of us to really drive that change forward. So as we continue to navigate the difficult financial times in the months ahead, I'd like to thank each and every one of you for your passion and commitment to fighting for the most vulnerable people in our society and for advancing financial inclusion and shared prosperity for all. Thank you.